What if the secret to stock market millions wasn't luck, but timeless advice from the legends who've built empires? From Warren Buffett's patience to Jesse Livermore's bold bets, these experts turned markets into fortunes. Today, we're uncovering untold expert advice on the stock market stories behind their wisdom that can supercharge your portfolio. Whether you're a beginner or a pro, these tips could be your edge. Let's trade up. Welcome to my channel, where we discover the stories behind money and wealth. Building on the historical flair of channels like HistoFund, this video dives into expert advice from stock market icons. We'll explore four legends: Warren Buffett's buy and hold magic, Jesse Livermore's trading psychology, Benjamin Graham's value hunting, and Peter Lynch's everyday investing. These aren't just tips, they're battle-tested stories from booms and busts. By the end, you'll have a toolkit to navigate Wall Street like a pro. Like if you're ready to invest smarter, and subscribe for more wealth wisdom. First up, Warren Buffett, the Oracle of Omaha, worth over $100 billion from smart stocks. Back in 1950s Nebraska, a teen Buffett bought his first shares with paper route money, learning early that stocks aren't casinos. His core advice: buy wonderful companies at fair prices and hold forever. Story time. In the 1960s, Buffett scooped up undervalued American Express after a scandal tanked its stock 50%. While panic sellers fled, he bet on the brand's Motit's unbreakable network. The result? That investment snowballed into billions as compounding worked its magic. His famous eighth wonder. Today, at 93, 90% of his wealth came after age 65. Proof of patience. The expert tip here is to focus on economic moats, like Apple's ecosystem. Use tools like Yahoo Finance to find Buffett stocks steady growers under $50 a share. Avoid day trading hype. Let time multiply your money. As Buffett says, the stock market is a device for transferring money from the impatient to the patient. Start with an index fund like VU for that long game win. Next, Jesse Livermore, the boy plunger who made and lost $100 million in the early 1900s. A self-taught trader from zero, Livermore dominated bucket shops betting on price moves like it was poker. His killer advice: the market is never wrong. Opinions often are. Cut losses fast. Let winners run. The story: in 1907, he shorted the panic, netting $3 million. Over $100 million today, by reading crowd psychology's Potting Fear in rising volumes. But in the 1929 crash, he shorted again, making $100 million, only to lose it all by the 1930s, chasing greed. Livermore's tragedy was ignoring his own rule. He held losers too long. He died by suicide in 1940. But his wisdom lives on in books like Reminiscences of a Stock Operator. You can apply it by using stop-loss orders on apps like Robinhood, setting them 7 to 8% below your buy price. Track your emotions, journal your trades to avoid bias. Livermore teaches us that markets are psychological wars. In today's volatile crypto era, this simple rule can save portfolios from wipeouts. Tip 3. Benjamin Graham, the father of value investing and Buffett's mentor. In 1914, as a young analyst, Graham survived Wall Street's pre-crash frenzy, authoring The Intelligent Investor amid the Great Depression. His timeless advice: buy with a margin of safety stocks trading below their intrinsic value. Here's an epic tale. In 1949, Graham's fund bought Geico cheap after a fire loss undervalued it, with a safety net buying at half its book value. He turned a $700,000 stake into over $10 million as the company boomed. Graham's method was to calculate true worth via earnings, like a PE under 15, and assets, while ignoring the hype. He retired a multimillionaire, proving fundamentals beat speculation. Your move is to screen for bargains on FinVizLook for stocks with low debt and high dividends. Graham's edge was treating stocks like farm sales, not lotteries. In bull markets like now, This helps avoid bubbles, perfect for beginners building wealth steadily. Finally, we have Peter Lynch, the fidelity wizard, who grew $18 million to $14 billion in the 1970s through the 90s. A Cadet Stern manager, Lynch's advice was to invest in what you know everyday companies with growth potential. He didn't need suits. He shopped at malls for his ideas. Story highlight: in 1978, Lynch spotted Dunkin' Donuts exploding and his town stores were popping up. Customers were loyal. He bought shares at $1, riding it to over $50 for a 50 times return as the franchises boomed. His Magellan Fund beat the market for 29 years straight by picking 10-baggers. Stocks that go up 10 times from consumer trends, not algorithms. He retired at 46, worth over $350 million. The hack for you is to scan your own life Amazon from your online shopping or Tesla from the EV buzz. Use apps like StockTwits for sentiment, but always verify with earnings calls. Lynch says the real key is to invest in businesses that make sense. This is ideal for retail investors trying to dodge Wall Street noise. From Buffett's patience to Lynch's everyday eye, these experts' advice has created trillions in wealth. Let's recap the key takeaways. First, hold quality long-term like Buffett. Compound your way to being rich. Second, master psychology like Livermore. Discipline over emotion is key. Third, hunt for value with Graham's safety nets. Avoid overpaying. And fourth, spot growth in what you know. Per Lynch, turn your observations into opportunities. You can start today. Open a brokerage account with a company like Vanguard, and maybe paper trade first to get comfortable. Read their books for more depth. In our volatile world of AI stocks and recession fears, this timeless wisdom always beats the fleeting trends. Just like HistoFund shows us, history's experts can light the path to your own fortune. Loved these stock secrets? Smash that like button, subscribe for more money stories, and comment below. Which tip will you try first? Share your wins with the community. Check out my playlist for stories on Hollywood's riskiest bets or the empires built by bootleggers. Thanks for investing your time with me. Now go invest wisely.